Provide that for us with.
In terms of you're spending many millions with advisors. I was just slightly surprised that none of these advisors told you that your targets were unenforceable on lending. Did you not expect them to point that out to you?
The advisors were looking at the quality of assets. That was the only area we asked them to work on. That was the specialist advice.
So you didn't have anyone advising you around the targets that you set to the banks on lending? For all the millions of pounds in advisors that you were paying, none of the advisors were advising you on the targets that you set?
I think we felt that the advisors couldn't tell us anything which we didn't know on.
So you knew they were unenforceable then, did you? Because I mean, these targets were unenforceable. It would be pretty bizarre if a bank took the view that it wasn't creditworthy to make loans to a firm, that they would go ahead and make those loans because there's a target there. I mean, that would be a pretty strange decision for them to make. Not to mention that the direction of travel from the regulator was for them to increase their capital base, and therefore they'd be less likely to be making loans to, say, a construction firm, because that would have capital implications. So what I'm driving at is whether, when you made this deal with the banks, you got the right concessions, and whether the concession you sought on lending targets, which we know is unenforceable, and I would advise was known to be unenforceable at the time it was made, was anything more than cosmetic. So were you getting advice from your advisors on it, or was that a decision purely by the Treasury? And if so, why was it taken when it was unenforceable?
That was a Treasury decision. We didn't think that the advisors, it was not within their areas of expertise, so we didn't think that they would be able to...
not within their expertise, what the credit policy, the credit risk policy of the bank and what it would lend and the criteria on which it would lend.
Oh, sorry, I misunderstood. I thought you were talking about the target within the context of macro policy and macro conditions in the economy. In terms of the specific credit decisions, the lending commitments explicitly said that they were to apply to lending based on market demand and commercial judgment. So there was nothing in the lending commitment that would make the banks depart from that. What the lending commitments did do was to summarise the potential benefit to the lending capacity of the banks of the additional capital cover that the asset protection scheme was providing.
But they have done it. I mean, you've got a huge hole in your target, which is saying we will put it down to the banks. It's the bank's judgment. And as we see, I mean, the Bank of England said in December 2010 that the dominant influence in terms of there not being much lending has been tight credit supply. And the issue we all experience with our local businesses in our constituencies is that, particularly if you look at certain industries like construction, they can't get loans, and that's because the bank credit risk committees say we're not prepared to lend to them. They're not the right risk. And you set a target which left it open to the bank's judgment, and therefore was unenforceable. So my point being, did you get the right concession? What other concessions were potentially available for you to secure, given that the concession that you secured was unenforceable?
Well, I think there are limits to the role of the state in directing lending. As I said earlier, I think lending agreements were part of the package of these announcements. It was a collective action problem. What we wanted to try and ensure is that, banks lent where it was profitable to do so. And if you look at the lending, in 2010, as according to the National Audit Office, these banks are on target to deliver their lending targets.
But you've reduced the target. You've reduced the target.
No, in 2009, they did hit their mortgage lending targets. They didn't hit their corporate lending targets because there was a massive repayment of debt by the business sector, largely on the back of a reviving corporate bond market, which allowed big corporates to borrow very large amounts.
You're suggesting that there was